Hello, everyone. Uh, my name is Anae Agostini. I'm CEO of CID Insurance Programs. I want to welcome you here today to our successful strategies to build your workers' comp book webinar today. Our speaker today will be Darby Fisher. She's our work comp underwriter, and she's very good at underwriting work comp. Also, Jacob Cole is our marketing coordinator, and he takes care of everything behind the scenes, so it makes sure it goes smoothly. So, logistics will be, as you all know, you'll be on mute. You'll be able to hear, which you can, but not speak. But your voice is important, so please post your questions in the chat at any time throughout the webinar, and we'll stop and answer them for you. There'll be a short survey at the that will pop up after the webinar, and we also appreciate your feedback there as well. So, what are we going to learn about today? So, first and most important, and how to build a workers' comp book, how to better understand how to write workers' comp for different sizes of businesses, and then you're going to learn a lot about from case studies that will broaden your workers' comp strategies. And this will make sense as Darby goes through the presentation. And then, of course, you want to better understand how to effectively compete in the workers' comp arena. So I'm going to start out by just sort of opening up with a bigger picture, helicopter view for competitive strategies. You want to step back. You want to look at your whole commercial book this way. You want to step back and take a look, and really what you're going to see is a balancing act between small, medium, and large-sized businesses, and how important they are to the equation of not only your workers' comp book but your whole commercial book. Understanding the underwriting of the different size businesses is what will create your competitive edge. And then in addition, Darby's going to talk about presenting value-added insurance solutions and competitive premiums as being the key to your work comp production success. Also, she's going to talk about analyzing different workers' comp risks. So you're going to spend some time with her drilling down on different premium categories and how they impact underwriting workers' comp. The greater the premium, the more important it is to analyze the risks. It is not just about submitting applications for a quote. There is, and she's going to talk to you about the premium range that really creates a competitive edge. So let's get started. Darby, I'll let you take it from here.
Hi, everyone. So we're going to be discussing first the value of small business workers' comp. So small business is the heart and soul of your workers' comp book. These policies are the foundation and are going to make up the majority of your work comp book. Small businesses, they're typically easier and quicker to quote, most of the time receiving a proposal in the same day. Because of this, building your policy in force count will be faster. While a pro of binding small business is that it builds your policy in force count, you really do need to be thinking about the other side of the equation, and that is that small businesses aren't going to increase the premium in your book where medium and large size businesses will. So it is really important to incorporate other size premiums in your book, which we're going to discuss in depth further on. Small businesses are more cookie cutter and do not require further underwriting review by the carrier, which is why you're going to receive that proposal more easily. They don't have as many exposures. The payroll and employee count are typically smaller. They have a good claims history, and they aren't experience moderated. These are generally the things you're going to see when you're quoting small businesses, and they're typically your accounts categorized under $15,000 in premium. Most of your workers' comp book should be built on small business policies anywhere from the minimum premium, which could vary from $350 to $750, all the way up to 15,000, as these are the bread and butter of your book. Much of our book at CID is anywhere from that premium range because these policies are the most stable regarding rate, premium, and renewal retention. So, the most important way to get a competitive edge when quoting small businesses is obtaining a fast close. You want to know your carrier markets well, so working with an experienced underwriter who has the ability to go to market fast and efficiently is extremely important. You can always quote with multiple carriers, but there is always one that stands out with the best rates for that type of exposure. So, knowing your markets well can quicken the quoting to bind time. Quoting fast and easily with that one carrier who you know has the best rates for that type of exposure makes it really easy for you to develop a competitive edge when building your book of business. You can also cross sell your package policy to obtain their workers' comp as it creates an increased retention for all of your insureds. So we're going to move on to medium-sized businesses. And for the majority of this webinar, I'm going to be discussing with you what I call the sweet spot. You cannot build your book of businesses on a small business alone. So the next stage to consider is writing medium-sized businesses in order to help build a solid workers' comp premium book. While small businesses help to build your policy in force ratio, you need the medium-sized business to help build the premium volume within your book. These types of businesses produce premium anywhere from 15 to 50,000. It can go up to 60. Medium-sized businesses are the ideal premium size because you're staying under the radar of the big insurance retailers that want the business. Because of this, they do generate a better retention ratio in your book of business because of the experience mod, which we will touch on later. You need to balance your book with these sized businesses as it becomes a lot more competitive and profitable for you. So medium-sized business, they in general incur lower loss ratios. That's not always the case. Companies of this size do have the potential to have a lot of claims when they grow, especially when there's poor supervision. In addition, this premium range is when their first experience mod is typically assigned. When the experience mod is assigned, you'll see most medium-sized businesses ending up with a credit, resulting in premium savings. For those who need a refresher, anything above 100% is a debit and below 100% is a credit. Since the claims activity seems to be more stable in this size of premium, more often than not, you will see the experience mod on the lower end. While medium-sized businesses generally incur a lower loss ratio, it still is really important to keep an eye on the insured's claims activity, and we do encourage our brokers to order loss runs at any time throughout the policy. Since claims are reported directly from the insured to the carrier, you're not notified that a claim has occurred, and nobody likes surprises at the time of the renewal. So make sure you're doing that. Even if it's once every 3 months, once every 6 months, it's good to know what's going on with your insureds. Although middle-sized businesses submissions require more work than a small submission, they're not as much of a headache compared to those larger businesses. So you typically won't see non-renewal notices, which can occur due to a class of business no longer being written by the carrier. You don't always see a major debit on the policy due to the experience mod. That's now so out of control you have to go and explain it to the insured. The greater the premium, the more important it is to analyze the risk in depth and think about all sides of the equation that make up a competitively priced quote from the carrier. So we're going to move into our first case study, which is a restaurant exposure. Writing middle-sized businesses are imperative to effectively compete in the workers' comp arena. While I walk you through the next two case studies, we're going to be learning how to sell a risk to your carriers. So what items are going to be of value to you when analyzing a risk and quoting it with carriers? And how does analyzing a risk efficiently help give you a competitive advantage over other brokers wanting the same business? So when receiving a submission, I'm looking for all the bulleted items listed to get a general idea of the business exposure. Of course, I'm going to be looking for further information, but these are the basic items I will need up front. This business is a restaurant exposure that has 3 locations in California. I want to make sure all of those are listed on the application in order to avoid any problems at audit or any claims issues. Uh, Typically, I go back to my broker if I only see 1 location listed on the application. Since they have so many employees and they are a restaurant exposure, I just want to double check. They are an LLC, so I want to make sure ownership is at 100%. And upon my review, payroll is at 400,000. Because there's so many types of different food exposures, to help understand where this business lies when quoting with my carriers, I would check to see if this is either a sit down dine in restaurant, a tavern, a fast food business, or a local deli. There's such a wide range of restaurant exposures, so you really need to understand the operations in order to know what additional information to be looking for. So there on the flip end, a lot of small restaurant exposures are easy to quote and do not require further underwriting review, which is something to keep in mind when you're building your book. More palatable, easy to quote restaurant exposures would be those deli shops or small payroll fast food chains. As this being a restaurant, tavern, and reviewing the risk summary and payroll for this business, I know it's going to fall within the medium sized premium range. So you want to understand the risk as if you're the business owner yourself. That is your competitive edge. Getting to a place where you can anticipate the questions going to be asked by the carrier so you can have this information up front is going to be the difference between you and another broker. So for a risk like this, questions I can anticipate being asked for a restaurant exposure are, do they have live music? Do they offer delivery? Is delivery done by employees or a third party vendor? What's the percentage of alcohol sold at the business? Do they have bouncers or security to check IDs for exposures such as taverns, where this one it does fall under that? So when the premium and payroll is higher, you can expect these questions to be asked by the carrier. So knowing the risk extremely well gives you the competitive edge to quote quicker than other brokers. Now, for all medium-sized businesses, I'm looking in depth at the risk summary. So this risk summary shows that the insured's had almost 10 years in business, which is great. However, they do have a few claims filed, along with 2 that are still open. Um, while reviewing this, I can infer that the 3 claims were small, as it only resulted in $16,000. However, there are still 2 that remain open, and we aren't able to predict how much those will incur cost-wise as long as they continue to remain open. While their mod is 89%, the experience mod is a rolling figure, and because there are 2 claims still open, you can expect the experience mod to increase over the next few years. This is a conversation worth having with your insured. What I would be questioning while reviewing the claims history is, what does management look like? Are there safety measurements implemented to keep employees free from injury? Is there a likeliness of claims to continue occurring? Is there a severity or frequency claims problem? In this case, I would gather it's a frequency problem and would be discussing with the insured on what they can implement in their business to turn things around before it gets too out of control. As a broker, you want to write medium-sized businesses. However, you also want to write clean businesses so you can avoid a non-renewal prompted by the broker or by the carrier. As I mentioned before, middle-sized businesses usually have an experience mod under 100%, and our case study is at 89%. But this is where I would encourage you to keep an eye on the claims activity throughout the policy. In a year's time, the experience mod can go from a credit to a debit. So having frequent conversations with the business to check on the supervision and hiring practices will help the insured stay under 100%. I mentioned credits briefly when discussing the experience mod. While with small businesses, there is typically no negotiation in premium. However, with middle-sized businesses, discount credits can be applied given the overall quality of the risk. So understanding the management within the business and the safety and training measurements put in place can help explain why the insured should be allowed for additional credits. So always see what's available to your insured when quoting medium-sized business. So we're going to
Barbie,
move a little bit.
there was a question that came through um, that what was asking, uh, do we have a supplemental document that could help them in gathering the appropriate information?
Yes, so on our website, and we can send that out to all the brokers who've registered, we do provide supplemental applications for all the types of exposures that we write in the workers' comp department. So you can find everything there, and then typically if I'm receiving an application and I don't see a supplemental, I'll end up providing one back to the broker so it can be completed. So we're going to go in depth a bit more on the overall summary of the risk. We know that there was some claims occurred and a couple that still remain open. So making your insured aware of the impact this has on their policy is very important, as oftentimes growing business owners don't realize this is a state mandatory remuneration and not something they can get away from. That's why it's important to the insured utilize loss control carrier services, and that can be your competitive edge to mention when presenting the quote to the insured. Supporting documentation may be requested outside of the standard application and loss runs, such as the supplemental application, which I just mentioned. With restaurants exposures, you won't always see it. However, the carrier will ask those additional questions about the risk, like the ones I had mentioned in the case study slide. So, just keep that in mind. It never hurts to complete the supplemental application and have all that information up front if you're not sure what questions are going to be asked. So since the insured has been with two carriers, I'd want to know if this was carrier or insured initiated. Were they non-renewed or canceled by the carrier, or is it the insured moving at each renewal to a different carrier based on the premium amount? So it's important to remember if it's insured initiated, you want to block the market before another agent does. So I was able to submit the risk to the markets that I know are doing well with restaurant exposures and find the policy within 5 days. And I do want to mention CID is seeing our carriers present extremely competitive quotes in this restaurant exposure. The current rates for this class are the lowest I've seen in a while, and our appointed carriers are eager to write more of this class of business. So definitely send in your submissions. The next case study we're going to analyze is a contracting exposure. What important details you should be looking for, what you should be going for after a high exposure business like this, and what strategies can you utilize to obtain the business. So I look at contracting exposures much differently than any other risk I come across because there's so many more determining factors on whether a carrier will write the risk or not, as opposed to an exposure that's easy, such as a retail store. So the first thing I'm wanting to determine with any contracting exposure is if the business is artisan or general contractor. That way I can get an idea of how many markets I'm able to quote the business with. So based off the name, Valencia Plumbing and Drain, I know the plumbing exposure falls within the artisan contractors, which we do have a market for. A few other types of artisan are electricians, framers, painters, landscapers. So CID does specialize in artisan contractors. Their markets are expansive and very competitive with these types of contracting. So on the flip side, we do have our general contractors. I want to just briefly go over those, as they are going to be those harder to place risk with carriers for a few reasons. They may have a higher tendency for more claims to occur, or they could have a subcontractor exposure often exceeding carrier guidelines, which we do see a lot. Carriers are more cautious to write these risks due to the reasons I just mentioned. It doesn't mean that they are all declined, but when coming across contracting businesses, you do want to make sure they meet all the underwriting requirements in order to quote with carriers. So now that we've determined this is an artisan contractor and I do have a market for the risk, there are a few additional details I would want to know about the risk before I continue. Just like in our previous case study, you want to anticipate the questions being asked. So getting to a place where you know what the carrier needs in order to provide you with a quote gives you a competitive edge. So for a business like this, I would want to know if they're a subcontractor exposure. You should always have that listed on the application because the carriers are always going to ask. Most of our carriers can quote up to 25%. However, it would need to be lower than the W-2 payroll. The next thing I'd be looking for is if the insured is filed with the contractor state licensing board to ensure their license is up to date, because this is a requirement of the law. So once I've gotten those things checked off, I'm looking at their physical locations. I'm seeing how many employees they have and their payroll figure to get an idea of where the premium range is going to fall within. You'll notice there's a few class codes on the payroll section outside of the 8810, which is the standard clerical. There's two for plumbing. So these are broken up based on employees' hourly wage, and it's something you'll need to know when quoting contracting risks. So after ensuring payroll and class codes are correct, I'm going to be going into the most important thing, years of experience and claims history. So how many years of experience in trade can be a determining factor when asking for premium savings. So there's 8 years in business with 6 closed claims at $34,000 and 1 still open. Based on that information, their experience mod is at 102%. So we're going to go in depth more about the claims review in the next slide, but touching on the 102% experience mod, for a contracting exposure that's been in business for 8 years, 102 is manageable, but it's important to turn things around before the mod gets too high. And, once you lose sight of that, it really can escalate. So as long as the one claim is still open, more costs can incur and will inevitably increase the mod. So getting that claim closed as quickly as possible will help to mitigate any further debts on the policy. So we're going to go into the review of the losses. And as you know, as I mentioned, the mod may continue to increase as long as the claims are still open. That's why a competitive edge when presenting the quote is to utilize the loss control carrier services. A lot of people don't do that, and they need to before it gets out of control, so that way they can get things back on track. I would be looking for information on the claims as to whether the injured employees are still working for the business, if the insured has implemented any safety measurements or training, what does their supervision look like, what personal protective equipment is used by the employees. So some of these questions are going to be asked by the carrier, and they're helpful to you in providing the carrier with additional information. So you should know the business inside and out as if you're the one running it. In doing so, you can go back to the carrier with all the information you have on the risk and request additional credits, and that will be another competitive edge when quoting the business. I had quoted a business that was just above a target premium I was trying to beat. So when I went back to the carrier underwriter with a detailed and extensive list of the safety and PPE preventative measures that the insured had in place at their business, they were able to give me additional credits. And something to remember is the carriers want the business as much as you do. So, giving them that additional information really does make a difference. So the insured's been with 3 carriers and has had a lapse in coverage. Again, you want to know if it's carrier or insured initiated. With contracting businesses, typically there's inspections done after you bind. The carrier will send someone out to make sure that everything's up to date industry standards and work is being performed safely. Inspections can be misconstrued as tedious, time-consuming requirements that the insured don't want to deal with, but in actuality, they are great for your insured as it's helpful to the insured as a preventative measure for claims to occur. This business, again, it does have a lapse in coverage, which is not unusual these days as everything is slowly getting back to normal. We're finding in the last 6 months or so that a lot of contracting businesses are now getting back on their feet and hiring employees again. So carriers are aware of the current industry, and while in the past they may have declined a contracting risk with a lapse in coverage, they're more likely to quote the business now and can still present a competitive quote. So for the underwriting information outside of the standard application and physical loss runs, all contracting risks are going to require a supplemental to be completed as it obtains the additional questions the carrier and each agent need to know in order to fully understand the operations of the business. So after all that information I went through, I feel confident going to my markets because I can answer questions about the business as if I'm the owner myself. Again, that makes all the difference when analyzing and submitting risks to carriers. So we're going to move just briefly through strategies for large-sized businesses.
So
Now that
just
we've
before we start that slide, Darby, there's
mhm,
a question that came in.
okay.
Can you see it on the screen? Is it, will a CID write new business as well as a company that has not had workers' comp and has been in business for a while?
So we can write new businesses. It's helpful if the business owner does have some years of experience, but we do have markets who are willing to write, along with those who have not had work comp but have been in business for a while. Our markets tend to get a little smaller with those who have not had work comp but have been in business, but you know, carriers are a little more lenient right now just due to the circumstances of the time and the last couple of years. So it's definitely something that I would still send over to my markets and we could still get you a competitive quote. So moving back to the strategies for large businesses, these are essential to building a comp book as they add fast production volume. And, you know, you do need to keep in mind this is one large policy you can easily lose in a year's time. So seeking out large businesses are going to be the most challenging for new and renewal business. And there's a lot of competition with the size of premium. So a lot more strategic planning goes into large businesses. And even when you have the account, you have to be thinking about the renewal term a few months out, making sure you're quoting with the business with other markets in order to obtain the most competitive premium. Because if you aren't, you can guarantee someone else is. You're going to have far less of these policies, but you'll need to pay more attention to them than any other. Um, your businesses that qualify as larger accounts are the ones with greater exposures, more accidental exposure, and higher rated class codes. Um, as you become more qualified, you will begin to attract larger sized businesses, and I can definitely help you bind those. So, whether they have claims or not, it's always important that insureds sign up for customized loss control and claims management services, just like I mentioned for the medium sized businesses. So, it will inevitably help the insured in avoiding claims activities. For insureds that have a large premium or high risk exposure, I highly recommend your insured sign up to mitigate any claims. And so each of our carriers has their own guideline for quoting high experience mods. Generally, we can see quoting up to upwards of 200%. However, it will show in the insured's premium, so utilizing the carrier's claims management services is a great idea in order to turn the problem around. So I'm going to hand it back over to Anae. Um,
Great job, Darby. Good information. So I'm just going to do a few takeaways for building your workers' comp book. Uh, Small business is going to make up the biggest and PIF policy enforced portion of your workers' comp book, but it will produce less premium volume. Medium-sized businesses are essential to building your workers' comp premium because that's that sweet spot that Darby was talking about. That where you that it's the key to building a, a book, a production book of workers' comp. And then your large size workers' comp accounts, they will generate higher commission revenues, which we're always interested in. So, but again, those are they're the more challenging ones, and then you have to pay a lot of attention to those because it's great when you get it, but it really hurts when you lose it. So it's something working those renewals early is important. And then remember to step back and take a helicopter view of your workers' comp book. Thank you. That ends our webinar today. Thank you so much for joining us. Make sure you visit our website if you're new to us because we've got lots of tools. You can find out about upcoming webinars. You can watch any of our recorded webinars, and there's a lot there to learn from. And we've got all kinds of broker tools to help you. And then Darby is available. Her contact information is on the screen, and she's available to assist you at any time with answering questions that you may have or what information that you may need to to gather in the case of a certain class of business. So please utilize Darby and submit your applications today. Thanks so much for joining us.